Hi friends, welcome to my presentation on homeownership within the gig workforce. I wanted to do this presentation to help those that are self-employed because this information is super necessary. So here we go. The gig economy is not new. People have always worked gigs, but today when most people refer to the gig economy, they're specifically talking about new technology-enabled kinds of work. This includes Uber, DoorDash, Poshmark, Postmates, and the like. Examining the gig economy. Let's examine the gig economy. What is the gig economy? The gig economy is made up of three main components. Companies that connect the worker to the consumer in a direct manner, including app-based technology platforms. Independent workers paid by the gig, i.e. a task or a project, as opposed to those workers who receive a salary or hourly wage. Consumers, who need a specific service, for example, a ride to their destination or a particular item delivered. So companies would be Uber, DoorDash. Independent workers would be those who sign up for the app and choose to deliver and sell to the consumers. And of course, the consumers are the customers. So who is a part of the gig economy now? Well, for one, technology platform companies, Uber, Lyft, Airbnb, Etsy, and others. These platform companies have a few distinct commonalities. They facilitate direct transactions between consumer and producer. They have flexible work schedules for gig workers. They provide online payments from which they also take a cut. And they provide online profiles and reviews of both producers and consumers. 2. Gig workers. There are two broad categories of gig work, and these are labor providers and goods providers. Labor providers include drivers, handymen, and delivery men, and these are workers who rely on gig work for their entire livelihood, often because they have trouble finding other options. Goods providers are artists, craftsmen, and clothing retailers. These are workers who do not depend on their gig work income, often because they have other supplemental income, or they have another full-time job, or the gig work generally provides supplemental income. And 3, consumers are a part of the gig economy as well. While some people earn their income solely from gig work, others use it as supplemental income. Some freelance jobs involve highly technical, skilled work and pay well, while others require nothing but a phone and pay minimally. Many workers choose to pursue this work, while others do it out of necessity. Many people don't consider tasks like babysitting or house cleaning to be gig work. Others don't consider freelance engineering to be gig work either, yet plenty of surveys consider gig work to be any work outside of a 9-to-5 job. This is where statistics get muddled due to biases on how to classify the gig workers over the last few decades. The history of gig work. In 1915, jazz musicians coined the term gig to refer to performances. In the 1930s, during the Great Depression, farmers sold their land due to drought and falling prices, and 25% unemployment made it almost impossible to find steady work. People at the time found work as migrants, moving from farm to farm to help harvest. In 1946 became the rise of temp agencies. In 1948, Manpower Inc. was founded to provide temp staff. In 1994, Amazon launched its online marketplace selling books and also becoming the first online platform for buyers to sell goods and purchase goods and sell items. In 1995, 10% of Americans worked in alternative employment, contracting, temp agencies, and on-call work. In 1996, Craig Newmark started an email newsletter called San Francisco Events, and the list soon grew beyond local events, including everything from apartments to job openings, and thus Craigslist was born. 1999, Elance becomes the first online platform to connect freelancers with businesses looking for contract labor, and it has since merged with Odesk to form Upwork. And this is now one of the largest online freelancer platforms in the world. Seamless also created a platform to connect restaurants with customers to assist in food delivery, and it has since merged with Grubhub and now contracts freelance workers to make the actual order deliveries. In 2005, YouTube was founded. Amazon Mechanical Turk was also born. In 2008, Airbnb and TaskRabbit launched. And in 2009, Uber is founded, connecting drivers and riders through their app. In 2010, WeWork launched, offering individuals and businesses with the option to lease individual desks and small offices by the day or month. In 2011, Poshmark was launched by Manish Chandra. And in 2018, in the first major federal ruling on the gig economy, Uber workers were classified as independent contractors rather than employees. Gallup reports that 36% of U.S. workers are a part of the gig economy in some capacity. The global gig economy generates $204 billion and is expected to grow by 17% by 2023, with the United States predicted to have more gig workers than non-gig workers by 2027. 1099 employment in New Jersey. U.S. labor and employment laws predominantly protect workers classified as employees. The Civil Rights Act of 1964, Title 7, Americans with Disabilities Act, ADA, Family and Medical Leave Act, FMLA, Fair Labor Standards Act, FLSA, National Labor Relations Act, NLRA, and state unemployment and workers' compensation laws protect employees only. Statutes, however, generally define employee in a circular fashion as someone employed by the employer, leaving it to the courts and sometimes state commissions to determine whether a worker is an employee eligible for protection or an ineligible independent contractor. Self-employment in New Jersey. If you provide a service, own a business, or own and run a farm, you are self-employed. Self-employment income is reported as net profits from business on your New Jersey income tax return. Some examples of self-employed income include hairdressers, landscapers, child care providers, contractors, and gig workers. Examples of gig work include ride-sharing, freelancing, digital marketing, and search engine optimization, consulting, and renting and selling property. Be sure to maintain business records throughout the year if you plan to claim a NJEITC, which is a New Jersey Earned Income Tax Credit. You must be able to prove you earn income to claim this credit. Business records can include your sales tax certificate of authority, your business license, permit, or certificate, cosmetology and hairstyling license, or a home repair contractor license issued by the New Jersey Division of Consumer Affairs, your website address, books, records, or ledgers showing expenses paid, such as supplies, as well as business income earned, documents that support the entries in the records submitted, for example, cash register receipts, bank statements, invoices, credit card bill statements, etc. Any 1099 MISC statements, copies of bank statements in the business's name, and proof of business advertising. Common self-employed tax write-offs. 1. Individual retirement plans or IRAs. 2. Business use of home or dwelling. 3. Deducting automobile expenses. 4. Depreciation of property and equipment. 5. Promotional expenses. 6. Banking fees. 7. Air, bus, or train fare. 8. Restaurant meals. 9. Health insurance premiums. 10. Other entertainment costs may be written off as long as they are necessary business expenses. And 11. Mileage. In the mid-20th century, the analysis shifted to whether workers were covered by labor and employment laws, such as unemployment insurance, workers' compensation, tax responsibilities, compensation, and other employee-associated benefits and liabilities. Under this test, courts look to the economic reality of the relationship, i.e., whether the worker is truly economically independent, but control is still a critical factor. If the company controls the worker, can the worker truly be independent? We're now going to go into a question and answer with the only consultant. This is Katherine Studley of Prisma Tax Group.
What's up, you guys? This is Katherine, the only consultant, coming in hot with some frequently asked tax questions for self-employed individuals. That is anyone that's earning income on a 1099. If you're not familiar with the only consultant in Prisma Tax, I run a completely remote and innovative judgment-free tax firm focusing on any freelancer or independent contractor. Jumping right into it, the first question is, how should one who is self-employed or works in the gig wage industry prepare themselves for tax season? Moral of the story, if you are self-employed, the first thing you need to do is to keep accurate records. You need to be tracking all of your business income and expenses throughout the year. This includes receipts, invoices, bank statements. That's going to help you calculate your taxable income, which is your income less your expenses, and that'll help you to claim all of your deductions when we file your tax return. It's important that you find a tracking method that works for you. If it's a spreadsheet or if it's QuickBooks, or I have some clients that do everything by hand, I wouldn't necessarily recommend it. But if it's a system that works for you and it's something that you can maintain, then do it. Another way that you can be preparing yourself for tax season is to understand your tax obligations. As someone who is self-employed, you are likely going to be required to pay estimated quarterly taxes, which is something that we can help you set up. Just know that it's literally paying quarterly tax. You'll still only file one tax return throughout the year. But if you're not up on your tax obligations, you could be subject to penalties and interest if you miss anything. And the last tip for you on being proactive for tax season is to plan ahead. That is to be organized, to keep all of your tax documents in one place to avoid any last minute stress when it comes to getting organized for tax season. All right, the next question is, what is the most important thing to do when preparing your taxes if you're thinking of buying a home within the next 1 to 2 years? So if you're looking to buy a home, the most important thing you can do, again, is to have accurate and complete documentation of your income and expenses. So that's going to be your pay stubs, bank statements, receipts for business expenses, basically your profit and loss statement and your bank statements. That's what lenders are going to be looking at, as well as your filed tax returns. You want to make sure that you're filing your tax returns on time and that you're actually paying the taxes that you owe. If you file your taxes and you cannot pay your tax liability out in one sum, you can set up something that's called an IRS payment plan or a payment plan with your state, and you can pay it off like a credit card. But likely mortgage lenders are going to be asking for proof of your tax filings as well as your tax payments. And mortgage lenders are going to be looking at your recently filed tax returns, and if you've been self-employed for a while, they'll likely want to see a history of that, 2 to 3 years. They could potentially also check your credit score. All right, next question. How can a gig wage or self-employed individual set up their taxes to benefit them in the long run when it comes to getting approved for things like a mortgage or a loan or a car? So one thing that you can do is to build your credit. Your credit score is like a super important factor that lenders consider when they're evaluating your loans. Make sure to be paying your bills on time, keep your credit utilization low, and not be opening different credit accounts unless you absolutely have to. This next one's a little bit difficult if you're self-employed, and that is to maintain a steady income. Lenders want to see a stable source of income that can support your loan payments. So if possible, try to keep your income steady. Another thing you can do is to pay down your debt. It can be very hard to get approved for loans if you have a lot of outstanding debt, so make sure you're prioritizing paying it off. And you also want to save for a down payment. A lot of loans are going to require a down payment, so it's important that you're saving up for that expense ahead of time so that you are prepared. And my last tip on that is to shop around. Don't just apply for a loan with the first lender that you're coming across. Take the time to actually compare different loans from multiple lenders to make sure that you are finding the best rates. So it takes a little bit of homework, but it's definitely worth it. Next question. This is a really good one. Are there any write-offs that can hurt you more than help you when it comes to buying a house? So there is definitely a disadvantage to taking too many business expenses. Mortgage lenders are looking at your debt to income ratio when they are evaluating your loan application. And your debt to income ratio is a percentage of your monthly income that goes towards paying off your debt, and that includes your mortgage payment. So let's say that you're a realtor and you made $100,000 last year, but you're taking $60,000 in business expenses. So your net profit that you're showing in the books is only $40,000. So you might want to reconsider a lot of those expenses if you are writing off too much. So we talked about DTI, which is debt to income ratio. You should also know what AGI means. That is your adjusted gross income. And that's another number. This is line 11 of your tax returns. Mortgage lenders are also considering this number as well. So business expenses are very specific to your small business. So it does, depend on what kind of business you're running and what kind of things that you're writing off. This is why you definitely want to be consulting with a tax professional at least quarterly if you're self-employed, so you can make sure that everything's on track to make your money work for you in the long run, so that you're always being strategic. Cool. Next question. What's the most important thing to know about taxes as a 1099 worker? So the first thing you should know if you're earning a 1099 is that in the eyes of the IRS, you are technically a small business and you are self-employed, which means that you are responsible for paying both the employer and the employee portion of Social Security and Medicare taxes. It's also known as your self-employment tax. And this currently amounts to 15.3% of your net income. It's your business income less your business expenses. That number at the end, your profit, is subject to 15.3% self-employment tax, as well as your tax bracket. And again, just want to drive it home. What's the most important thing you need to know about taxes as a 1099 contractor is that you need to keep detailed records of all of your income and expenses throughout the year so that you can accurately report your income and expenses throughout the year. I have a lot of free resources on my website. Feel free to check that out, theonlyconsultant.com and prismatax.com. It's very important that you understand what is considered a write-off for your small business so you can be tracking it appropriately. And then again, we also talked about this, but making estimated tax payments is something that can be very beneficial to you as a self-employed individual. How would you structure your taxes so that your business and your home life are separate? Would you suggest an LLC? So first of all, before we're going to talk about LLCs, we'll just talk about separating your business and your personal income. This is super, super important as someone who is self-employed, is that you need to have a separate bank account dedicated to business. It can be a separate personal checking account, totally cool. Does not need to necessarily be a business bank account, but you need to have one bank account where all of your self-employment income is coming into, and this goes by business. So if you're in real estate and you also have a hair salon and you are a W-2 employee, your W-2 income is going to go into your personal bank account. That's when that already exists. It's where you're paying your rent out of. Then separately, you should have a different bank account for your hairstyle income and expenses and for your real estate income and expenses. An LLC is a business structure. It's an entity. There are actually no tax benefits for setting up an LLC from the top. You would still file your individual income tax return, your 1040, that's due April 15th, and you would still file what's called Form Schedule C, that's your profit and loss from a small business, except if you had an LLC, you would include your LLC and your EIN number on that. An LLC does protect your personal liability if you were to be sued or go bankrupt. So it draws a line between your business assets and your personal assets, which is always a good idea. I am not an attorney. I can only speak from a tax perspective, and that is that LLCs do not provide any tax savings, but there are a lot of legal benefits to setting up an LLC. You should know that if you form an LLC, it is a write-off to you. The formation is a write-off, and so are the annual maintenance and renewal fees to keep that going. And then if you were to incur any bank fees from your true business bank account, that would also be a write-off as well. But I would say, it depends on your line of work. If you're buying any property, I would definitely buy property in an LLC. If you're engaged in any contracts with anyone, I would get an LLC because now you're exposed. So if you have whatever, a photographer that you use all the time, or if you have a contractor, make sure that you have an LLC, so that way the contract is between your business and the individual. So that way if something goes south, something goes sour, and they sue you, they're suing your business and not you personally. Later, if you are netting around $70,000, that's netting, that's business income less business expensive, that number is around $60,000. It may be beneficial to have an LLC taxed as an S corporation, which is a separate video, but just know that that is when the tax situation, or the tax savings do come into play, is with the S corp. Next question is, how would you structure your taxes to help your credit score? So first, it's not directly correlated. There is some overlap, but your credit score is determined based on like credit history, which is your payment history, your credit utilization, the length of your credit history, types of accounts you have, how many accounts you have, how many recent hits you've had on your credit. So your tax structure doesn't necessarily directly impact your credit score. But again, what can you do to help yourself? Diligently and accurately track your income and expenses. Then you at least always know where everything stands, and you'll have the separate business and personal bank accounts like we talked about earlier. You should aim to have no more than 30% of your credit being utilized, but that's another video. What are some homeowner tax write-offs for self-employed individuals? So you are able to write off a portion of your rent and utilities, assuming that you are using a portion of your home for work. So this is specific to how you are self-employed, and if you are truly using a room in your house for your home office. There's a lot of rules on this. I would look it up. But it's based off of a percentage. So let's say your apartment's 1,000 square feet, your spare bedroom is 100 square feet. That's where you're using as your home office. So that makes, 100 into 1,000 is 10%. So 10% of your rent and your utilities would be a write-off. There's also a write-off for the mortgage interest deduction. You can deduct the interest you pay on your mortgage up to a certain amount on your tax returns. There's also a property tax deduction and home improvement deductions. These vary because everyone's tax situation is very different. So it's important to understand that these exist, but they may not pertain to you, which again is why it's very important to use a tax professional. So it's someone who can actually analyze your tax situation in your small business, depending on your income streams in your state and what's going on, to make everything kind of work for you. And on to the last question is, how can we prepare throughout the year to be ready for tax season? What do we need to keep track of? So again, we're keeping all of our invoices, we're keeping all of our receipts, we're keeping all of our bank and credit card statements. Something to consider is that your bank may delete your bank statements after a year. So make sure you're downloading them as they're available to you, because otherwise you have to call and set up an account, and that can be very annoying. So make sure you're holding on to your bank and your credit card statements. Also, any other contracts or agreements that you're in, if that's with clients, vendors, suppliers, whatever, make sure you're tracking the mileage that you're driving for business. This is for the business use of your personal vehicle. So any mile that you're driving for business, make sure you track that. You can use something like Google Maps to be very, very specific. Then you want to be also keeping your home office records. That's if you're going to use a portion of your home exclusively for business, like we talked about before. You want to make sure you're tracking all of that. Payroll records if you have employees, and then keeping all of your tax filings and your state returns, and as well as estimated tax payments, so that you're just always organized. And there you have it, folks. So what is the moral of the story for someone who is self-employed? You're tracking everything, you're saving everything, you're keeping your organized records up to date throughout the year, so that way it's very easy to prepare your tax returns. If you need any other help in your taxes, we're always accepting new clients at Prisma Tax. You can check out my websites, prismatax.com, theonlyconsultant.com. Again, I'm Katherine
Thank you
Studley,
so much,
and
Katherine,
thank you very much,
for
guys.
all your advice and your help. You can contact Katherine below at LinkedIn, Facebook, her website, TikTok, and Instagram. Shortening the homeownership gap in New Jersey starts with credit repair, legitimate resources, and creating a safe space to ask for help. Obtaining a mortgage while self-employed. This is some advice from Joe Wilkolaski over at Green Tree Mortgage Company. They are one of our partners at my brokerage, Better Homes and Gardens Real Estate, Maturo Realty, located in Kendall Park, New Jersey. It's all about how you file your taxes. If your business is 5 years old or less, you would need to present 2 years worth of tax history when obtaining a mortgage to buy a home while self-employed. If 5 years old or more, you would only need to present 1 year worth of tax history. In the words of Joe, if someone just starts an OnlyFans, starts a cash business or whatever it may be, and they're a year and a half in and decide they want to buy a house, but it's August, they have to file their taxes then for that following year. So get your taxes done January, February, or as soon as possible so that you can then show that income again for 2 years. In New Jersey, there are no specific write-offs that can hurt more than help. It's key to balance the amount of write-offs you have with the amount of money you show. If not, then you won't have income to utilize for approval, especially if you're doing a bunch of write-offs to avoid taxes not claiming everything you've made. The more money you show, the better. The amount of write-offs is what matters because this controls your income. What should you do to prepare? You should have an income, and in the state of New Jersey, there is no income discrimination. You cannot be discriminated against the source of income you have, whether it be financial aid from the government or basically anything else that's legal income. Next, you should set up your business properly, get an LLC. 3, have a qualifying credit score. Depending on the program, it's generally good to have a 620 or higher, but some programs do go as low as 600, and these can include VA loans or FHA loans for first-time qualifying home buyers. It is suggested that you should save 40% of your money, especially if you're not paying tax on it. And lastly, you should talk to an accountant to structure your taxes the right way so that you're prepared come tax season. Thank you so much for watching, and if you have any other questions, you can email me at shaylarealty@gmail.com. My Instagram is tattooedrealty, and so is my Twitter.